Am going to recap my trade from this morning, and then we're also going to talk about why I took the trade, obviously, and then what went into it and how I used SMT divergence, how I used liquidity, market structure, and especially at all-time highs, because all-time highs can be very tricky to trade if you have not done it before. Even if you have traded all-time highs before, it gets difficult. Because price action behaves a lot different than it does when we're not at all-time highs. And we also have to incorporate other things like global conflict. There's a lot of things that go into the market right now that we're not typically used to, but we have to be aware of and we have to understand how to deal with. So let's jump into it. Again, if you ever have questions, feel free to shoot them in the chat and I'll get to them when I can. But let's talk about the trade I took this morning. Only trade so far today. Um, Wanted to look for another trade later on, but this market has just been sideways, so I haven't taken any other trades. But I took a pre-orb trade this morning, which I don't always do, right? I'm pretty adamant about waiting for the first 15 minutes most of the time, because a lot of the time the first 15 minutes is a lot of manipulation, a lot of volatility. It's hard to be able to trade it correctly or trade it with good conviction. But this morning we got a setup that I really liked. So as always, what I need to do, what we always have to do before the market opens, is run through our pre-market checklist, right? So when it comes to our pre-market checklist, I'm always starting off on the daily time frame. So I'm just gonna get rid of everything here, and I'm gonna walk you through exactly what I did and how I saw a trade. So this market was very bullish from the start, right? We're at all-time highs. We have been creating new all-time highs. We got a down close candle yesterday, but it wasn't anything major. It was a high volume candle that did not get a strong bearish close. So whenever I see a high volume candle in a, like, so let's say we're in a bullish trend like we are right now. This market has been bullish for a long time. If I see a really high volume bearish candle, but it doesn't go anywhere and it has a small body, that tells me that there's a weak amount of sellers and that the longs are probably going to continue. So I saw that going into the day. And the other thing is going through our other time frame. So obviously our previous day high is our target, or all-time highs. So that's previous day high, all-time highs. That's going to be our most obvious target in the market for liquidity. And we can look at the same thing on ES. ES has looked a little bit weaker today, so I didn't even think about taking a trade on ES. Everything for me was in queue today. So that is our previous day high right there. And then we have all-time highs just above that. So right there, all-time highs. So when I'm going into the day, I'm seeing this daily candle. I'm seeing the 4-hour. There's not really anything that tells me the 4-hour should be bearish, especially at all-time highs. We always have to kind of assume that price is going to continue bullish. So nothing on this chart showed me bearish whatsoever. Where, first of all, we had a 4-hour bullish fair value gap, or a 4-hour busy right here, and we had respected it. We were delivering. There was no bearish fair value gaps above us. There was nothing really strong enough to hold us down. Okay, so then I went to the hourly time frame, and going into the day, I'm kind of looking at the hourly. Do we have anything that's really going to hold us down? Not really. There's not really any fair value gaps. There's not really much that is going to, try and hold us down. So we had delivery from an hourly busy or bullish fair value gap down here. See how we traded into it? We were pumping. We had delivery from an hourly bullish fair value gap here. We never disrespected that level. So now I know that we've traded into this hourly fair value gap below. We've traded into this one. We've respected both of them. We have not inverted them. And we are getting a bounce. We even retested it on the 4 a.m. candle and got a strong bounce. Okay, so now all of the higher time frames are confirming my bullish bias. So when I go into market open, I am looking for a few things. First of all, I'm looking at this 15-minute trend. Do we see this pre-market trend that we created? We get our first initial low at 1 a.m. right here. We never come back down below that low. Then we get our next low at 4:30. This becomes our London low. But we do not make a lower low. We hold this bullish trend. And I'll show you on ES as well. Okay, so now we have another higher low. What are we doing over here? We're making higher highs. So now we see this trend forming. We see this low put in here at 7:30, a higher low. Okay, what do we do after that? We make a higher high. So now I know going into market open, we also make another lower low or higher low. So this trend has been holding the entire morning, really since Asia, right? We've been trending up the entire time. And we still had that all-time high and previous day high level that had been unswept. So now I know we have a obvious target above. We have a strong bullish trend. So this is where I'm actually looking for my trade. So when the market opens, what I wanted to see was a move down to sweep some lows. The first low that I was looking for price to sweep was actually this low right here. Not the best swing low, right? Not like a super strong low, but I wanted to see a sweep that. But what I noticed is that price got a strong close below it with this candle. So now I'm seeing that momentum like, okay, we might come down to sweep this internal low down here. Okay, perfect. We come down and we sweep that low. But what do I notice at the same exact time when NQ is sweeping that low, ES completely fails to sweep that low. Like it's pretty far from sweeping it. So this is when SMT divergence comes into play. Okay, so SMT is the divergence in price between two correlating markets. In this example, NQ comes down and sweeps the low. Okay, what does ES do? ES fails to sweep the low. So now we have an SMT divergence, and now that is starting to confirm my bullish bias. Now, there is a thing called a Judas swing. If you haven't learned about it before, a lot of the times or most days in the market, you'll see a fake out move in the first, 5 to, 15 minutes. That is what we call a Judas swing, or, it's a fake out move. It's trying to manipulate. So this leg down right here, this bearish leg down is our Judas swing. This is our fake out move, our manipulation. What is this doing to retail? It's stopping out every retail trader that is trying to long from up here right at open, right? You got a bunch of retail that sees a bullish market. They're going to try to long, and they're going to get absolutely wrecked trying to long. But what we do is we want to wait for a sweep of a low, and especially if we get an SMT divergence, that'll just confirm that longs are still in control. So here is the difference between the way I normally trade and what I did today. Normally, when I see this 1 minute bearish fair value gap form right here, I am going to wait for that 1 minute to get inverted before I take a trade. But today what I noticed is that ES was very close to taking out this high up here, right? So it had a higher chance of sweeping and reversing. So what I didn't want to do was wait for NQ to invert right here, jump in a trade over all the way up here, just for it to stop like this and then come back down, right? Because ES had taken out this high and we got what? An SMT divergence. So this SMT divergence right here is when I ended up actually taking my TP on my trade. So this high is what I was looking to target at first, but because we got the SMT, I took a TP. But here is what I did. I got really aggressive this morning. So I saw that once we swept this low and we started to get some wicks back to the upside, right? So if you look at some of these bearish candles here, let's see if I can drag that real quick. So look at this move right here. Boom, we sweep the low, but notice how we don't get a close below and we get a nice bounce from that level. Okay, that's my first confirmation. And then we get another move down. Oh, another nice bounce. Okay, so now I have confirmation that these longs are going to step in, or at least they're going to attempt to. And because we have that SMT divergence, because we've already taken out our pre-market low, this should become a protected low where price does not need to come back and sweep. So I literally took my trade. If we go to my executions, you'll see I took the trade off of this candle right here. So I think I got filled at 838.75. So kind of up here, right here. So I got filled a little high. But what I did is I just kept my stop at the lows. I think exactly, I was like 100 ticks. I thought it was a little less. So I have my stop at the lows because that becomes a protected low, and I'm targeting previous day high. But again, what happened that made me take a TP early is that ES came up and swept the high. So now I'm thinking to myself, okay, well, this has now become the orb high because our first 15 minutes are up. So now I have my orb high. ES sweeps it. NQ is still at this point about 54 ticks away from sweeping. I am not going to let NQ come back down on me and then get a manipulation to sweep these lows again, because now this low becomes the 15-minute orb low, right? Which becomes a strong liquidity level. So once ES sweeps this high, this to me is no longer a protected low. Now we could very easily come back down and sweep that low and trade back maybe into the hourly gap, which we didn't end up doing, but this no longer becomes a protected low. So what I did is I took my first TP off of this move right here, Once the second we got that SMT, as you can see, I took my TP and then I trailed my second stop all the way to beneath this candle right here. So I was able to catch at least 100 ticks out of this move, where if I didn't do that, I would have taken a first TP and then gotten stopped out at break even. But because I knew that we had that SMT divergence at the orb high, it gave me more conviction to take a TP. And as you can see, price came back down and it would have stopped me out. Or let's say I took zero profit and I held this trade the whole time. This would have come all the way back down and completely stopped me out, either for a break-even trade or for a loss. But because I'm aware of SMT divergence, I'm able to take profit and actually make money on this trade. So here's the next trade that we could have taken, but I wasn't really in the mindset to take another trade at this time. My thing is here, when I take a winning trade or a losing trade, it's not always the best idea to jump right into another trade right after, because this is what's probably going to happen. Is one thing, if you won your trade, you're very emotional about it, so you're feeling greedy, you're feeling on top of the world. It can cause you to jump into another trade and get kind of blinded by that greed to take a bad trade. The other side of that is the negative side. If I take a loss and I jump right into another trade, I'm probably trading out of emotion of trying to make my money back, or FOMO, or whatever it is. So what I like to do after, taking a win or a loss is take a few minutes in between, calm down a little bit, then look for the next trade. So this would have been the other setup, the same exact type of trade. Right here, you wait for a sweep of the orb low, and look what happens. ES fails to sweep the low. So what do we get yet again? An SMT divergence. Okay, so right here, ES fails to sweep. NQ sweeps. Boom. SMT. So now we have another trade opportunity where you could have done one of two things. Is you could have taken the aggressive entry again off of the bounce, gotten in off of this candle, kept your stop below, even for a tighter stop, and then just targeted the previous day high. Boom, up here, and you're good to go. Awesome, great trade. The other thing is, if you're expecting expansion on this move, then what would be another ideal kind of trade setup would be this IFEG right here. Right? This would be another ideal setup if you were expecting a huge move. Since I didn't really know if we would continue higher today all the way up here, just because we had a big SMT at previous day high and all-time highs, this probably isn't a trade that I want to jump into all the way up here to keep a 129 tick stop when my TP is what, about 154 ticks. That doesn't make that much sense to me, so I probably wouldn't take that trade. But let's say you were expecting expansion, this would be a great inside the orb trade to catch the breakout all the way up for that expansion. So that's another way you could, you could trade that. You could either take the aggressive SMT entry there off the bounce, knowing that we've been holding these lows, we've been holding the 15-minute trend for a long time. That could be a good entry. Again, once we're at all-time highs up here, I don't love the idea of chasing orb breakouts because we haven't seen too much expansion. We've seen a lot of more range-bound price action once we get into like 10 a.m. So it hit 10 a.m. and I'm thinking, you know what? I don't really want to chase a orb breakout here when we're at all-time highs. We're at 10 a.m. I just want to keep my money right now and then see if price action gets better. Now, if we look for the rest of the day after that, we have been sideways. So yes, I could have caught another trade up on these longs, but I just haven't trusted price action as much after 10 a.m. or at least like going into like 10:15, 10:30 time. As you can see, 10:20 hits and we just chop. We're getting a little bit more expansion now in the market. And this is when you have to really rely on ES and on Bookmap. If you want to take a trade at all-time highs, you have to be very, very careful. Because look at this. Right here, you see ES not even close to taking out our high of day, right? Which was formed at 10:22. Not even close. What is NQ doing? It's expanding way above our high of day, making new high of day. So this is a hard thing. It's like, well, price is so bullish, but we have these SMTs. We have ES not even close to all-time highs up here. So this one could end up just dumping back down and taking out some lows. It's not going to be as clean a follow through. So when I see price action like this at all-time highs, it kind of keeps me sitting on my hands for a while, not really wanting to jump into this stuff. So my mindset shift recently has been, I want to get involved as early as possible, because the best moves we have seen in this market have been usually within the first 30 minutes of the day. After that, it gets kind of chaotic. You'll see huge spikes in volatility. You'll see these really tight trends. You'll see big manipulation moves. So it's a lot harder to trade those. But what I've noticed about the first 15 to 30 minutes is we've seen a lot better moves, but you have to be way more aggressive in order to catch them. So my thing is, a lot of people will hear the word aggressive and they'll think that they should just jump into a trade without, doing their analysis and just being aggressive but gambling. We don't want to gamble. Aggressive means smart, right? So it's a smart trade idea. You still have an A plus model, but you're just jumping into it maybe earlier than you normally would. Maybe you're not waiting for as many confirmations, but you still see the structure. Like this trade that I took this morning, that is not a trade that I would typically take in normal markets, right? Because I like to wait. I'm a much more conservative trader. I like to wait for confirmation. But in these markets, sometimes it's the only option is to take a more aggressive trade as long as your risk management is still good, right? We don't want to be aggressive and have a 200 tick stop loss and we're only targeting 150 ticks for a TP. That's not smart, right? So if we're going to be aggressive, we need to be smart and we need to make sure that our daily bias, our drawn liquidity lines up perfectly with the trade that we're going to take. So this trade was a little sketchy for a little bit because we started chopping a lot, right? But I knew that I had the confirmation of the sweep. I had the confirmation of the SMT. I had the confirmation of previous day high as our target liquidity. And all of those things told me, and the protected low, that all told me that we should see a continuation higher. So I'm okay with taking an aggressive entry off of the SMT before we even invert this gap. And it pays off sometimes, right? It's not always going to pay off. You have to be smart about it. But that's the mindset shift that I've had, that I had kind of today, where I was thinking to myself, like, yes, I need to make a change. I had someone tell me, like, hey, you should think about being a little bit more aggressive on some of these moves. I'm like, okay, let me look into it. I looked into it. I started checking out our opening price on a lot of different days and seeing how that movement happens. I've seen a lot of Judas swings. I've seen a lot of SMTs. I've seen a lot of aggressive trades working out. And by the time we get the inversion, the trade's already over. So I don't want to wait too long for those trades. So that is how I traded SMT today. That's how I look at SMT in general, especially with the 15-minute orb. It will give us a good insight on where the market is trying to go next. And yeah, guys, that's really what I wanted to hop on here and explain to you guys, kind of just recap that trade. And even though it's not a home run, it's a base hit, right? What do we have to do as traders? We have to collect base hits because base hits will eventually lead to more home runs, but home runs are rare. Home runs are rare, right? You're not going to hit home runs every game. What you need to do is hit base hits as much as you can to get base runners on and then drive them in and start making money, right? So today was a base hit kind of day. Just made, the money that I wanted to make, got in the market, got out. It's okay. We don't need more than that. We don't want to overdo it. We don't want to be greedy. We want to take what the market gives us. So today was a basic kind of day for me. And I could look at this move and have tons of FOMO and think, I should have jumped into this. But for me, oh well, I wasn't a part of this move, so this move doesn't matter to me, right? It doesn't matter. I didn't get an entry. I didn't get involved. I didn't want to. So it doesn't matter. What I'm not going to do is get FOMO about this move and then jump in all the way up here just to get stopped out, right? I am going to take the entries that I see, whatever the market gives me, I'll take it, I'll make my money, and I'll walk away. So that's been my mindset and the mindset shift that has helped me a lot. I have not been looking at the 30-second time frame. I have in the past, Ray. It is something that I think I might start doing a little bit more of. I have been seeing a lot of hype about entries recently on the 30-second time frame, so it's definitely something that I think I'm going to start looking into and maybe checking out to see if we can get some more dialed in entries. It's been giving you sniper entries 2 weeks in a row. Yeah, dude, I've seen that. A few different traders have been talking about that, so I'm like, that's definitely something I think I want to look into and see if I can't use the 30-second for some better entries. I've used the 30-second in the past. It just hasn't been something I've used for a while, so I'll have to kind of get back into that. Christy, no problem. It's my pleasure. I'm happy to do it. Thanks for joining up. Yeah, guys, do you have more questions, more comments, anything else? Again, just kind of a quicker, just breakdown lesson. I mean, not super quick, about 20 minutes. But I will post this after on YouTube. So if you want to, come back and rewatch the video, maybe take anything from it, I'll have that for you. But that's really the main thing I wanted to explain because, yeah, all-time highs, guys, are not easy to trade. This war market is not easy to trade. It is difficult. It is really difficult. So what we have to do is make these little adjustments. I had to make an adjustment in my mindset. I had to make an adjustment in my entries. And when we make those little adjustments, it's not like we're changing our entire strategy. We're still using the same concepts because the market still moves in the same way. We just have to adjust how we get into the trades, how we get out of the trades, and have to shift our mindset just a little bit. This market is pumping still. And again, this is where it gets hard. It's like, yeah, you could chase these longs, but when you see a pump like this, let's say you waited for this pump, 140 ticks, and then you try to jump in up here. There's nothing up here structurally, right? There's no candles up here, nothing. All you can look at is bookmap. So especially if you don't have bookmap, you definitely should be very careful about trading this. If you have bookmap, you might be able to, spot that the next level of liquidity on these charts is 27,100. That's the next level that is starting to heat up on heat map just a little bit. That would be the next level, right? So like you can see it, but we're not always going to run to those levels. So you got to be careful with all-time highs. It can be dangerous when you mix that with war news all the time. It's volatile. These moves will be quick. So like I said before, I'm trying to get in my trades early in the day, get out and just make my money and walk away and not stare at this market all day for 7 hours, right? Because it gets really tiring, especially in these conditions right now, where you'll wait for a setup for 2 hours and then the market will do the exact opposite of what it normally would, and now you're frustrated. So then that frustration will lead you to take a trade that you normally wouldn't take. And now you just sat on the charts for 2 hours just to blow up your account. When you could have looked to be a little bit more aggressive at the start of the day, take an A+ setup, win or lose, and walk away for the day instead of staying on the charts all day and then taking a trade that you wouldn't normally take just to lose money, right? That's what we want to stay away from, because I'm going to be the first one to tell you, and I'll admit this, these conditions are frustrating, man. They are. But we can't let it get to us. And I noticed myself letting these conditions get to me and get the best of me recently, where I would give in to those emotions and just get mad and get frustrated and say, why is the market moving like this? But that will do me no benefit. That will do none of us any good. Letting our frustration get the best of us will only cause harm to ourselves and to our accounts. So I am on that mindset shift of who cares what the market does? As long as there's an opportunity to make money, I'm going to take that opportunity to make money, right? That is my shift in mindset, and that's what I'm going to focus on. I don't care what the market does. Who cares if it pumps 1,000 ticks without me? If there was not an opportunity for me to make money, there wasn't an opportunity. If there was an opportunity and I didn't jump on it, I need to do something about that, right? I need to jump on it next time. So my mindset is, if there's money to be made, I'm going to make money. If there's not money to be made, I'm not going to make money, right? That's it. Simple as that. I'm going to simplify it. I'm not going to be upset about this market because we have no control over how this market moves. All we have control over is our own decisions, our own emotions, and our own actions, right? So that's what I am focusing on right now. So let's shift that mindset from being frustrated with the market and being pissed off to, okay, it is what it is. Yes, we all understand it's frustrating. We all understand it's not easy. But I'm going to shift that mindset and I'm going to focus on what I can control. How can I make money in this market? And if I do that, I'm going to be just fine, right? I'll be just fine. Check, check. Can you guys hear me? Can you hear me? Can you hear me? Check, check. Hello, 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 hello. Can you hear me? Yeah, you can hear me? Okay, thank you, thank you, thank you. 1 to 2 trades, win or lose, so you can trade another day. Yep, that mentality has made me hold on to my express account. Let's go. That's exactly it right there, man. Yeah, 1 to 2 trades. Exactly, win or lose. That's it right there. If you can't accept that it's a loss, you're gonna lose it all. If you can't accept your profits, you're gonna lose it all. It's simplify, simplify, simplify. The only times I ever blow up, the only times I ever do bad, is when I take too many trades, when I cannot accept a losing day. And it gets harder if you, let's say you lose 3 days in a row. That sucks. It gets really difficult, right, to accept a loss. Every day you lose, it gets harder to accept a loss because all you want to do is make money. So I completely get that feeling. I feel that way too. But the shift that we have to make is long-term thinking compared to short-term. Who cares if you don't make money this week? Who cares if you don't make money this month? What if because you stay disciplined, you'll make money next month, right? Even if you didn't make any money this month. Because the difference is, and I'm a victim of this, is let's say I have a funded account and I lose 3 days in a row, but I'm sticking to my risk management and I'm still okay, but now I'm down like $600. On day 4, I take another loss. Now I'm down 200. So now I'm down 800 overall. If I choose not to walk away in that moment, I will probably blow the account, right? And that's everybody. If you choose not to walk away after taking your 4th loss in a row and you're already at your daily loss limit, you are 100% going to make an emotional decision and you're going to trade that account away. So now you won't even have your funded account for the next month. But let's say on that 4th day, you do lose and now you're down 800 bucks. Walk away because you don't know. Maybe tomorrow, the 5th day, you'll find a trade and you'll make $400, right? And now you're only down 400. Maybe the next day after that, you'll make another $400 and now you're back to break even and now you still have your funded account. And that is longevity. That is how we build longevity and hold on to our accounts and actually make money. Because I know from personal experience, every time after that 3rd or 4th loss, if it was in a row, if I did not walk away and take the day off, I would most likely blow that account unless I got lucky on some emotional trade that I took that just happened to go the right way. Right? We can get lucky sometimes, but we don't want to rely on luck. We want to rely on our analysis. We want to rely on good decision making, and we want to rely on rationality. So that's the focus for sure. And right now it's harder than ever. I get that. So we need to be even better with our emotions, even better with our discipline, and we have to have a plan that's written out in front of us that says, if I am down $200, I am walking away. There's no other question, nothing else. I'm walking away. If I take 1 or 2 trades, I am done for the day, no matter what my profit is, no matter what my loss is. And I'm coming back tomorrow. I'm going to journal my trades today. I'm going to learn from my success or learn from my mistakes. I'm going to come back tomorrow ready to go. It's a new opportunity to make money. That mindset shift builds longevity in trading. If we don't make that mindset shift, you will not build profitability. You will not build longevity. It'll be a constant cycle of losing an account, buying an account, losing an account, buying an account, losing 5 accounts, buying 5 accounts, right? It'll just be that cycle over and over and over and over again because I was in that cycle. I know the cycle. So it will not change until you make that mindset shift, right? So right now, let's make that shift. Let's do something. Do something about it. Make that shift. Even if you're not perfect at it, even if you mess up for the next week, who cares? As long as you start to shift your mindset and start to fix those bad habits, that's all that matters, right? That's when you're going to be on the road to success. So that should be the shift in mindset. And then a shift in trading a little bit, right? I'm shifting the way I trade just a tad. Nothing crazy, but just being a little bit more aggressive when it's time to be aggressive. And with those 2 things, that's a recipe for success. And no matter what kind of markets we have, no matter what conditions we have in the markets, we can still make money, right? We just have to be a little bit better with our entries, a little bit better with our mindset. If we can do that, we can still make money. If we slip with our mindset, if we slip with our entries, we're not going to make money. It's going to be really hard right now. So yeah, guys, that's really what I want to come on here and talk about. Any other questions, any other comments, anything else you guys would want me to talk about, or what you would want to talk about? You let me know. Let me know. Jonathan. Yeah, so if this market continues the way it is right now, I don't know if I'd want to get involved in it, right? I don't think I would. I don't think I'd want to get involved in this market unless we see some major pullback. Otherwise, it's going to be chasing. Don't really want to chase these longs up at all-time highs right now. I got you, Ray. Thanks for the input as well. 100%, Johnny, 100%. Yep. Small losses are fine, man. There is small losses. There's nothing wrong with it. That is the game. That is the game. Small losses and bigger wins. That's the game right there. But big losses and small wins, that's not a good recipe. All right, guys. Well, I do appreciate everybody joining up. As always, if you don't have any questions right now, you can't think of anything, I will send this video to YouTube. I'll upload it, and if you have questions, just shoot them into the chat. Tag me if you think of something later that you maybe you meant to ask me, or you needed help with. Just if you think of it whenever, send it to the chat. I got you. Right. I'll help you out. I'll answer your question. I'll be there for you. You just let me know. Following your advice, taking a break of training, I think I'm still angry and sad for the expensive kind of loss. Yeah, yeah. Again, that's understandable. Yeah, again, Adux, I know it sucks, man. Trust me, I'm right there. I get it. I get it. But you need to do what's best for you. You need to do what's best for your mental health, what's best for your bank account, for your finances, everything. Right? And 100%, if you need to take a break, take that break, because it might be the best thing you ever do. Taking the break might be the best thing you ever do for yourself when you're trading. Get back on track, get back on your feet. Again, trading to try to make ends meet is a lot more difficult than trading just to, make a paycheck if you already have your bills paid for. It's a lot more difficult because our emotions are inherently tied to it, right? Tied to the outcome. So, I know the feeling. It's not something to beat yourself up over, okay? This happens to everybody. We've all been in this situation. I'm sure there's a lot of people that are in your exact situation. It happens to everybody. There's nothing to be ashamed of. There's nothing to beat yourself up over. Trading can be difficult in this aspect, right? So do what you need to do to get your life where you want it to be, right? Get back on your feet, and when you're ready to get back into the markets, get back into the markets, but don't rush it. It's okay. Deal with your emotions, right? Feel those emotions, deal with them, and you're going to be back. You're going to be good. I know you will, because I know you have the passion. I know you have the ability to. And right now it's just about what can you do to best, set up your journey for the future. So again, if you have questions, if you need to talk, hit me up. I got you. I'll help you out. Um, yeah, no problem, man. All right, guys. Well, I do really appreciate you. Thanks for joining up today, for your questions, for your comments. Hopefully, you learned something of value today. You gained some value, whether it's from the technical analysis side or the mental side. Again, I'll post this for you right now. I'll upload it to YouTube. I'll put it in the chat. And yeah, unless anybody has anything else, that'll be it for me. I think that's all I got. But God bless. You guys are the best. Have an amazing rest of your day. And I will talk to you all later. Peace out, everybody.